Thank you very much for your time this afternoon. Let's start with that overall JSE performance. Flat in afternoon trade. I see industrials were in the red today, while mining shares did rather well.
Yeah, good evening. And I guess a bit of a soggy sort of feel about the market today ahead of what's going to be a very, very busy week. I mean, I heard you mention in your intro the budget obviously to look forward to, and a lot of reporting as well. We've got a couple of the big miners as well that have been following on from last week too, but certainly the miners seem to be the one where all the focus is and the ones that are certainly generating the cash at the moment.
Right, and sticking with the miners, Anglo Gold, a five-fold dividend that it's going to be giving to its shareholders. Some great news there. But then again, these mining companies, PGM companies as well as the gold companies, have been reporting some solid results.
Really, really solid numbers and quite extraordinary, actually. I actually had to do a double take as I was preparing. I didn't realize they actually had 19 billion rand in cash reserves at the moment. I mean, a couple of years ago, a few of the PGMs, the miners, they were really battling to, talk about mothballing shafts a few years ago. What a difference a few years makes. Really in demand. You've heard that word, super cycle, commodity super cycle being bounced around. And, our miners are actually at the forefront of it. So, a little bit of good news is sometimes needed as a country. And our miners are certainly really printing money. And I think Mr. Mimbaweni might be quite happy that those tax receipts from these miners are certainly going to make up for elsewhere at the moment.
Right. Sasol also in a better state after dealing with the whole Lake Charles project. They are no longer going to be needing to approach shareholders for money.
Oh no, what a difference a year or two makes. I mean, Sasol down at 20-odd rand a year or so ago, rights issues were being bounced around. It was a really, really tough time to be a Sasol shareholder. But once again, a little bit of good news that Lake Charles is now 100% operational, as you said. We've got the likes of oil, $64, I think, briefly this morning, $64 a barrel on Brent. West Texas above $60. It's much stronger rand, certainly helping them. And if you actually look at some of those numbers from Sasol, their debt was close to 4% of EBITDA a year ago. It's now closer to about 2.5, 2.6. So significantly cutting their debt because of a lot of events that they've managed to control, but things like the rand, much firmer. So yeah, long-term suffering Sasol shareholders certainly are smiling a little bit now with the share price at about 200 rand a share.
Shareholders in Liberty 2 Degrees are not smiling, though, are they, Nick? Some staggering figures that they released today about how they've performed. Obviously, it's as a result of COVID-19, foot traffic reduced significantly, and then tenants not paying rent.
Yeah, it's difficult. I mean, really is. I mean, the JSE at the moment is a tale of almost two different markets, and it's got the miners we just spoke about now, and then of course you've got the lockdown COVID effects like the retailers and the shopping mall owners. Liberty 2 Degrees, as we know, the owner of Sandton, one of the most the poster child for the REITs in South Africa. Yeah, cutting its distribution almost a half. And it's quite difficult to see where we are on the other side. Do people get back when the vaccines are going to be certainly rolled out? Will they get back walking around Sandton City? I'm not sure. But they did guide on Friday. It's not as bad as we thought, but the share price, nevertheless, still probably about 50% down from where it was a year ago, pre-COVID.
I think what's also worrying when it comes to companies like Liberty 2 Degrees is this online phenomenon and the staggering growth that it's experienced since COVID-19 hit us, wouldn't you say?
Absolutely. I guess the question is how much, as I said, do we actually go back? I think most consumers, the South Africans are getting used to online shopping. I mean, Checkers have showed it with their 60 app, 600,000, I think, signed up in December for it. So we're getting used to it as South Africans. We're starting to adapt that online e-commerce. And a question mark, yes, as you said, the question mark remains, are we going to stream back into shopping centres anytime soon? Probably not. So the jury's still a little bit out. They are going to get things right, but whether we go back to normal, I don't think so.
Right, let's move over to some international news, Nick. So everyone is watching that 10-year yield in the US, which has gone to about 1.3%, almost doubling in the last few months. Talk us through that movement.
Big concern. So the talking point, as you said, the yield curve is what everyone's looking at the moment. That is basically your cost of your 10-year note in America. Traders are implying that we have inflation coming along quicker than we think. On the one side, you've got the Federal Reserve, Jay Powell, talking at the yield curve down, saying rates are going to stay longer for as long as possible, lower for longer. And on the other side, you've got the traders, and you've got where the market's pricing, and the market is saying, we don't really believe you. It's 1.38%, I think, at the end of last week. As you mentioned, it's come back a little bit now, but that is your cost of money. And most of the cost of money around the world is benchmarked off that US 10-year. So the idea that we're going to have sort of free, easy money for as long as possible certainly seems to be running out. And this is definitely one to watch. I don't know what the tipping point is, whether it gets to 2% or 2.5%, that people get a little bit nervous. It does signify growth, but a fast-moving yield curve up is not good. So this is certainly one for investors to keep an eye on at the moment.
Very interesting insights there from Nick Kunze from Sanlam Private Wealth, giving us a wrap of the markets day. In the next bulletin, all eyes are on budget, so we'll be focusing on that, touching on taxes, TERS, and where the minister is going to be getting the money for this budget.